Good afternoon. In this video, we're going to go over this week's trades in the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I didn't trade that much this past week. I had 15 wins and 4 losses for a win rate of 78.95%, so below my 85% win ratio. But the last couple weeks, a few weeks, I haven't really traded that much. I usually trade like, I don't know, 25 to 30 plus a week, and I'm not even at 20 the last couple weeks. So yeah, I think the week before was even below 22. Yeah. So I haven't been trading that much lately, but been mostly because of FOMC and the stuff like that. So it's been choppy. But this past week we had FOMC, so this week coming up should be better. So now going into the trades, the trade ideas room on the what was Monday? The 12th. Okay, I didn't do Wednesday. Okay, the 12th I said SPY calls over 395 and Tesla calls over 180, and I don't have the timestamps because I didn't post my daily stats. I gotta do that again because that does screw me up. So let's see. I took 39.50 calls at 9:49. Just gotta do a couple things. Okay, here we go. Okay, I took the 39.50 calls at $8.10 at 9:49 on the 12th, which is right here. Got the red candle right here. It's what they say in the trade ideas room. I'm going to be a little off track this recap because I didn't do my daily stats all week. I was just going to do it once a week and not do it every day, but now that I'm seeing how much me doing it every day does help me when I do, especially when I do recaps, so I'll start doing them again. But yeah, I said 395, which is right here, pre-market high, round up for the round number, and I waited for the first 10-minute candle, which was red. Then when I broke over this 10-minute candle, this is where I grabbed the calls. I grabbed the 39.50 calls at $8.10, and they went to $10. Then I grabbed calls again at 10:27, which is right here. 10:27. I grabbed it right here. I think, I grabbed it right in here. Probably grabbed it early, anticipating it was going to break out, then it pulled back a little bit. Then it actually did pop. So I had the 39.50 calls again at 770, and they went from 770 to 1330 in that pop right there. I did finally break out. Then I took puts, the 39.50 puts at 1215, which was right here. Now I get why I took it here. It's consolidated in this area. It broke out here. It was a fake breakout. Then it came back down. It looked like it was going to flush or drop, but it didn't. So I had the 39.50 puts at 680, and I stopped out at 3. Then I ended up taking puts again, the same ones, the 39.50 puts at 39.50 puts at 114, which is right here again. Same thing happened. It popped up, had a nice violent pop, that it just got slammed really hard. So right when it got below this 395 20 area, this is where I grabbed puts. 39.50 puts at $6, and then it just popped. And I thought it was going to come back down. Then it just raged into close. I just was not expecting that. It was crazy. So I took 2 losses on Monday, not starting out that well. Then I ended up taking overnight puts at the end of the day on Monday. I took 398, 1213 puts at 460. I'm thinking we were going to get a I think it was numbers. So we had CPI numbers, I believe. I think so. I took puts into that, and of course it popped. So those overnight puts ended up going to 0. So not a great way to start the week. The Trade Ideas room on pre-market Tuesday. I said SPY puts under 410. 410 is right here. It popped up, then it kind of like had this little consolidation. So I took I waited until 10 o'clock. I didn't take any puts here. I should have taken puts right here, and I didn't. Oh, I did take it right here. For some reason, yeah, okay. For some reason, I thought it said 11 o'clock. Never mind. Yeah, I took the 40-60 puts at 10:03, which is this candle right here. So I did take it here. Great, good place to take it. It drops, it pops back up with 2 green candles. Doesn't break higher day, but comes back to a lower day, especially after a monster pop on CPI. And it ended up coming back down. So those puts went from 860 to 3120. Then I ended up taking SPY calls at 12:15, which was right down here, right at the 400 level. That big psychological number. I took the 40-20 calls at $7, and they went from $7 to $10 right there. So it was a nice little play. Then I took calls again. Took it twice right here, so I got it from here. They went from 7 to 10. Then I took them again at 29, 12.29. Right when it came back below 400, I grabbed the same 20 calls at 7:30 this time. They went from 7:30 to 8:80. It's a nice little play there. Then I took calls at 12:47, which was right here. No, 12:47. Right here. So wait a minute. I took it 3 times. 12:19. I'm gonna have to go down to the lower time frame because I can't really see it. Okay. The first one was at what? 12:19. Right here. Right when it hit 400, it got that 7 to 10. And then I grabbed it again at 12:29, which is down here when it broke new lower day. I grabbed it again. That's where it went from 7:30 to 8:80 right there. Then when it made new lower day again at 12:47, this is where I grabbed it again for the 3rd time. They went from, except the 3rd time I grabbed 40-15 calls at 8:10, and they went from 8:10 to 17:80. So nice little play there. So anytime, this was what you want to call one of those magical kind of plays, because it popped up on huge numbers. On news in the morning, it went from 399 to 414, which is a $15 move. Then it just fades all day long, and when you have a $15 pop, then a $15 drop, and the $15 drops at a big psychological number like 400, I mean, I will take it every single time. That's a play that I would take heavy because it has a lot to do with range. SPY does like to play in ranges. Typical range is $3 to $5. A larger range is 5 to 8 up to 10. 5 to 10, we'll say. Then extreme ranges are something that's really rare. It doesn't happen too often. Can be anywhere from 12 to 15. So when you have a $15 range pop up and a $15 range drop, and the $15 range actually ends up landing on a big fat round number like 400, that's something you just go not all in, but you just gotta go heavy on something like that, because you just don't have that kind of a matchup. And to me, I know it doesn't look like the pops were that much, but when you're getting $3 and $1.50 and another $9 plays off these, I mean, this is just free money in a circumstance like that. And you need to be like well aware of circumstances like that when they do happen, because range does play a huge factor. Stocks don't go 40 points. Unless it's a certain stock. I mean, every stock has an extreme range. I mean, Amazon, before Amazon did its reverse split, you could see $100 day, no problem, $150 day, no problem. But you just get, every stock has a normal range, a more volatile range, then you have just the absolute extreme range. And if you look at all the daily charts on the specific tickers like Tesla or whatever, you can see what the normal range is typically, and the more volatile range and the extreme range, which is usually the largest ranges you'll see. So range does play a huge factor in these plays, because stocks aren't just going to forever drop or forever pop. They are going to reach its range peak, and then it's going to end up chopping or bouncing or dropping, depending on which way it's going at that point in time. So with that said, that's Tuesday's done. FOMC, I didn't touch anything until FMC. Now I took a FOMC strangle play, 389.70 puts at 835 with 41.30 calls at 840. The puts went to 1840 and the calls just didn't do that well. So ended up being a nice little FOMC play. The last, I don't know, 7 or 8 FOMCs, it just raged, and I was very suspicious about SPY running up on those numbers, and then just keeps going, running up into FOMC. Usually you don't usually see that. So I had a little more on the put side than I did on the call side because of that. And sometimes you just got to go with a gut feeling. So and it did end up working out. So the puts did end up paying off. Then I ended up switching to calls. Now, the FOMC days are very tricky. I find the best FOMC days are the ones that Powell does not speak, because the moves aren't nearly as much. I mean, you got like what almost a $10 move, which is not that bad for FOMC. But the problem is you're playing 150 point spread, and you need to have some really massive moves just to end up doing pretty good. When Powell speaks, the volatility, the IV is through the roof. But on days when Powell's not speaking, you can literally play at the money. And even if the stock only moves $2 or $3, they end up paying so much better because you're at the money. And that's where you can see contracts go from like $7 to $40 versus a move like this where you're playing 150 points out, and they barely go 100% on a $10 move. I mean, it's just how it is. So that's why the FOMC days when Powell doesn't speak, IV is down so much, the market's not expecting it to move that much, but it still does move at least $2, $3, $4, and that's how you can play with low IV, and you can get at the money, and you can easily see 200-300% very easily on the non-Powell days. So I think those days are the best for FOMC, just primarily because of the IV. If implied volatility wasn't up so much on days of Powell speak, I mean, they could be 1,000% easily, but it is what it is. You just got to adjust to it and play it accordingly. So the last play on Wednesday, I only took 2 plays, the FOMC strangle play that I took calls at 303, which is rate 303. Right here when it got over the 400 area, over 400. That's where I grabbed the 40-30 calls of 730, and they went from 770 to 1860. So that was 100% play right there, just on that. And what ends up happening with FOMC, when the initial statement comes out, IV is through the roof. He speaks at 2:30, so that 30-minute window, IV usually drops quite a bit. It's still going to be kind of high for him, but once after he speaks, the IV just drops huge. So this is pretty much an IV crush right there. So if you're playing the initial announcement, you got to take it. You can't sit there and wait and hold for end of day, because you're playing 150 points out, and it could chop, or even if it does move, it doesn't move fast enough or high enough that you can end up taking a big hit on that. So you got to anticipate the stages of the day, because the first stage is the announcement, the second stage is his talking, then the third stage is the end of the day reaction to the FOMC. And there's usually 3 reactions on days like this past FOMC. You just got to end up playing each stage and not hold through all the stages, because you'll end up not doing too well. So then on see the trade ideas room, I didn't have anything on Wednesday because I didn't even look at it. I wasn't even going to bother. But on Thursday, I said SPY puts under 393, which is pre-market low, right down here, rounded down. Waited for the first 10-minute candle to form. Then I took puts at 946, so right here when it dropped, I took the 39.10 puts at 740. And they went from 740 to 1950. So I was already looking at puts. The first 10-minute candle's red. Took puts on that, and I had a nice little drop right there. Then I ended up taking calls at 1017, which is right here. I probably should not have done that. It was a nice little bear flag right here, and I thought it was going to bounce for some reason. I think that the put to call ratio this particular day was kind of high. I think there was more people on the put side. That's why I got the impression that we were going to pop. So I grabbed calls at 1017, which is right here. It dropped, popped back up. Thought we were going to pop. We didn't. Then I ended up averaging down at 1055, which is right here in this candle. No, down here. 1055. I added down here. So I initially got the 39.30 calls at $9. Added more at 550. Making my average 640, and then it dumped, and I ended up dropping it, cutting it at 330. So took a small little loss on that. Then I grabbed calls again at let's see, 2 o'clock. I waited till 2 o'clock, which is right here. No, right here. This is where I got it. You get dropped, consolidate a little bit, looking for over the 38. The 388.90 area, that's where I grabbed the 38.90 calls at 740, and they went from 740 to 870. I'm probably in this little push right here. When was the next play I took? 329. 329 right here. No, I got the push right here. Then I took 3,900 calls at 329, which is right here. Right here, I grabbed it. 3,900 calls at 850, then popped right here. Right, what time? 329. Right here. That's probably where it popped. Okay, I grabbed it right down here, and you can see the top of this candle popped up here. So it did from here to here, bouncing up to 20 EMA. So I got the 3,900 calls at 850, and they went from 850 to 1090 right there, and that little pop right there. You can see I got it down here to 20 EMA, and it popped up here. So it went from 389.65 to 390.10. So that's all it takes, especially at the end of the day. They could easily just pop on just practically nothing when you're at the money end of the day. So, and when you're up $2.40, you got to take it. I mean, you'd be kind of foolish not to, especially at the end of the day. Then on, let's see, Friday, I almost said put to call. Trade ideas room puts under 382.50, which is pre-market lows right down here. I took 3,900 calls at 9:49. You get the first 10-minute candle right here. Then you have this candle right here when it got over What time did I get? 9:30, 9:49. So I didn't grab it there. I grabbed it in this candle. So once I got over this area right here, for some reason I grabbed it up here when I should have grabbed it. Actually, no, this is the first 2-minute candle right here. For some reason I thought this was the first 2-minute candle. This is the first one. So when it did get over here, this is where I grabbed it. I grabbed the 3,900 calls at 880 and they went to 1040. So got that nice little play. I switched to puts right here. When it came back down, when it failed to really go anywhere and get momentum, that flushed right down through VWAP and the 20 EMA down to the lower day. Well, actually, technically, the lower day is right here, right at the 384.50. That's probably where I ended up grabbing it. The 38.40 puts at $7.70 in. It went to 17. So I got a $9 play out of that if he held all the way through. Then I took calls at 206. I didn't touch anything until 206, which is right here. You can see that it dropped down, popped back up, rejected the 20 EMA, rejected it, came back down, then it popped up again. This is where I grabbed the calls. I grabbed the 38.40 calls at 870. And they went from 870 to 1120 in that little push right there. Then I grabbed the last play at 253, which is right here. Rejected the white line is the 37 EMA. I don't really pay much attention to it, but it did pull back underneath the 20 EMA, which is the blue line. Then when it came back up to this 382.50 area, that's where I ended up grabbing the 38.40 calls at 820, and they went from 820 to 14.50 on that push all the way through. So I had a couple good plays. A couple of the plays, and a couple of bad plays. One of the plays I could have definitely avoided, but it is what it is. So hopefully this has helped you understand what I did, why I did it, and this is how you learn. So this is why you need to watch the recaps. So make sure you watch the recaps and get a good grasp of what I'm doing and how I'm doing things and what I'm looking at, and you'll definitely improve. So that's going to do it for the recap. Thanks for watching.